Hello and welcome to another Bybit tutorial. Today we talk about what are leverage tokens, because Bybit does sell them. So we want to talk about what they are, why you would use them, what the risks are. First of all, obviously I am here on Bybit. Where do you find them? You select the trade section, look at this leverage token section, and then you can see all the ones. So we can just select one and get into the trading dashboard, and then we can talk further. I will select BTC 3L now, and we then get into the spot trading section, because essentially they are spot tokens. So if you buy one of these tokens, you basically invest in a basket of the underlying asset, and you can see you have a vast amount of possibilities. For example, I could now invest in ETH, BTC, XRP, ADA, Atom, AVAX, Doge, .EOS, and many more. So what does that mean? So I have selected here BTC 3L USDT. It means that I am investing in this basket Bitcoin 3x leverage. So it's 3 times leverage, which means if Bitcoin goes up 10%, this token will go up 30% because it's 3 times Bitcoin. And then very important, this letter here, L, means long. So it's bullish. It's basically 3 times bullish. It means that if Bitcoin's price increases by, as I said, 10%, the price of this BTC 3L token will increase by 30%. So 3 times Bitcoin. It means with this one, I go long. So if I buy it and Bitcoin's price goes up, this token's price will go up as well. However, there is also the possibility to go short, and that is, let's say, something nice about these, because you can easily go short here on the spot market with these tokens. So I could just look now for BTC 3S, and that's the short one. So I normally don't use them, but this is the short token, BTC 3S. That means if Bitcoin's price, again here, Bitcoin is the underlying asset, 3 times short. So again, it's with leverage, which means if Bitcoin's price goes down 10%, this token's price will actually go up. So I will make a gain. Bitcoin goes down and for example, by 10%, then this token's price will go up by 30%. Okay, so I make a gain by Bitcoin going down because it's short. And the advantages of these tokens are that they are quite convenient. They're basically here to be traded on the spot market. You can go long, you can go short, you can invest with leverage. But unlike, for example, futures contracts, there is no end date, there is no fee for holding them. You don't borrow anything. So for example, if I trade on the spot market and I just take normal leverage, I borrow funds from the exchange to trade with leverage. Here with these, that's not the case. I don't pay any fees. So I could theoretically hold them for a longer period without paying a fee. But there's another problem if I hold them long term. We're going to talk about that in a minute. So there are some advantages. They're quite convenient. You also are not at risk of liquidation because you're not borrowing any funds. That's very important as well. However, so that they are sort of the benefits. And you can easily go long and short, and you participate in the price movements of Bitcoin just with leverage. Now, there's one problem with these. They are not suitable for long-term holding. You might use them for intraday trading in a trending market. That's, in my opinion, the only beneficial use of them. If you want to use leverage anyway, and you use them for intraday trading in a very strong trending market, because you can go long, obviously, with a long token when Bitcoin goes up strongly, and you participate in the gain, you make a profit. Of course, again, I didn't mention it actually, but of course, if Bitcoin's price goes down and you invested in the long token, BTC 3L, Bitcoin goes down 10% and you've got that token, your loss will be, so the BTC 3L token's price will go down 30%. So yeah, so as with leverage, you obviously maximize your profit, but also you maximize your loss. Now, with a 3x leverage, that's not anything out of the world, yeah. It's not a 10x, it's not a 20x or a 50x, which is unpredictable. A 3x is manageable, but there's one more major risk with this. And this is called, either you can call it wear and tear, or you call it volatility decay. And that is the problem why they shouldn't be held long term, and they also shouldn't be held in such a situation here where we have a lot of sideways movement. Because why is that? It has to do with so-called volatility decay. It's a bit hard to explain, but easiest way to understand is probably with a comparison. So let's say you're interested in buying Bitcoin and you purchase Bitcoin with $100. Very, very simple. On spot market, $100. After the day, the price then increases by 10%, and your investment is logically $110. Yeah, your investment went up 10%. But on the next day, if the price goes down again 10% from $110, that's an $11 drop. So your investment now is 110 minus 11 is 99. Okay, so that's where it is, yeah, and that's sort of depending on where you start. If it loses 10% from a higher price point, you lose more. Okay, so that's just what it is. Same situation, for example, if something drops 10%, you need more than 10% to bring it back to where you initially were. Yeah. Okay, so now if we compare that now with a leverage token, let's say you invested $100 into a leverage token, for example BTC 3L. It tripled Bitcoin's returns. So that would turn that 10% increase into a 30% increase, which is nice. So from your $100, you suddenly have 130. Bitcoin goes up 10%. However, with leverage token, you make 30%. From 110, what Bitcoin gets, if you buy it without leverage, to 130. But next day we said Bitcoin drops by 10%. So what does your leverage token do? It drops by 30%. Now that will cost you not $11, it will cost you 39. And in the end, you only have 91. Where with Bitcoin, normal investment, spot, no leverage, you had 99. With this one, you have 91. And if that happens a few times up and down in a volatile market, you're quickly going to be out of money. And that is the problem with this. Yeah, with those small back and forth movements, it eats away your investment. So that is why I think they certainly have a place if you want a simple way of trading with margin, leverage, but only really in a trending market and only short term. They are, in my opinion, not suitable for long-term investment. But yeah, many exchanges offer these days. Bybit obviously as well. They certainly have a place. It's just a different instrument of trading. They are suitable. I'm not sure, but I think in countries where futures are actually not possible, not allowed, crypto futures, you can still go short with these tokens. So there is a certain, there is a certain benefit, but obviously it all comes with risks, like every instrument. There's nothing risk-free in these markets. So hopefully that tutorial allowed you to understand what those leverage tokens are. Okay, and that's the tutorial. If you want to support more crypto online, if you don't have any Bybit account and you'd like to open one, you could use the affiliate link in the description. That would support more crypto online. If you like the update, then hopefully you did. And then please hit the like button, leave a comment and subscribe, and see you in the next video. Thank you very much. Bye-bye.